What is going on, YouTube? My name is Ty. What's going on, YouTube? My name is Ty with the Dividend Stock King with another video. Today, I'm talking about QTDE, okay? QDTE and why did I start a position with this fund. I've gone through my portfolio here. All my ETFs are pretty inexpensive. My expensive one is probably right now Misty right now in NVIDIA, but that's it because it went up in price. But I buy cheap ETFs because you get more money, you get more shares, and then with high yields, it's about your share count. It's all that matters, your share count. Why did I start with a QTDE, right? But first of all, I like it because at first I wasn't going to get into it. I thought this is going to be one of them funds. And again, I'm not getting financial advice. I was, and we don't know the future of this fund. Let's just put it that way. I don't know the future of this fund. 3 months from now, it could crash. So I don't know. But as of right now, it came out in March. It was $45, $40. Now, that thing has been retaining its NAV pretty well. The lowest it gotten was like $42. And it bounced back up. So it stayed under the $45 range. And most of these high yield funds, the main problem with these high yield funds is to pay a high distribution, and let's say pay $1. It drops $1 on X given date. It takes forever for it to go back to $1 to get back to where it was. That's the main issue with high yield ETFs. Now, some of them can recover, some of them can't. If the underlying, like Tesla or whatever ETF you follow, if it pays $1 and an ETF that tracks goes down, it's gonna be harder for that ETF to recover the dollar that is down. So we all know at this point in time, the lower the price of the ETF, the lower your distributions, the higher the higher the cost of the ETF, the more likelihood, the more you get dividends, right? Tesla's a prime example. It was paying 64 cents for the past 3-4 months, probably for a long time. And then when it hit $17, $16, it paid $1. So the higher the price, so the underlying must go up. So I'm gonna say this thing will probably go to zero. Well, not zero, but if it distributes weekly, 34 cents, 20 cents, it can't recover within 4 days. It can't recover 30 cents in the 4 days. And if it did recover 30, 40 cents in the 3-4 days, you have to go beyond that to be plus. So, but to my surprise, overall, it's only down like 0.2%, 12%, not even 1%. And also, it paid dividend every week. And I like it because it pays dividends weekly, right? So that's the main selling point of this fund. It pays weekly. Now you could say if it pays 25 cents every week, that's $1 a month. You might well buy Tesla for $17 to get $1. That is true. But the thing about this fund is mainly designed, in my opinion, to be reinvested every week. It's for compounding your shit. It's for a compounding machine. With Tesla and yield maps, you can pay once a month, which is great. But get paid weekly and you reinvest the dividends is a nice plus also. So I like that as well. I was looking for a fund that the NAV is pretty well. That's like $40. I paid $50. $45 is okay, but the dividends seems pretty nice. I'm looking at the dividends in the past. I paid 35 cents, 29 cents, 23 cents, 14 cents, 21 cents, 21 cents, 37 cents. Now, I own QTDE in my Roth IRA. I think this is a beautiful play to get a few shares in your Roth because you're getting dividends every Friday. So my thing is, I want this thing to compound for the next 5 or 10 years. And I get the dividend, reinvest it, and I get paid that next week. That's the main selling point of QTDE. It pays weekly. That's the number one thing that people drive to buy this fund. It pays weekly, and they hold the NAV pretty well. So I only have half a share. But I threw in $20 in it just to get my feet wet. I got my dividend as well. It's like 4 cents, but I gotta reinvest it. So this is a compounding machine. All the high yield compound fast. this compounds fast. So I have this in my taxable. I also have this in my Roth. And just imagine it paid every Friday for the next 30 years is incredible. I mean, every week you get a dividend, every week. So now I have the Defiance. Let's go here. I have the Defiance funds, as you see here. IWY, QQY, JumpY. I have the first week good, and again, the first week I can pay for Defiance, I can pay for QTDE. Second week is Yield Max, I still get paid for QTDE. The third week is my weekends, I have Alt and YMAX, I still get paid for QTDE. And my fourth week is pretty much Clip and in the final week. That also will have QTE. So I get paid 2 paychecks that week. I'll build up slow. This is really the compounding. This is a long-term goal for me. This is to compound those shares, compound the dividends every week. Today is Monday. I'm gonna get dividend Friday, right? And y'all know I have the Concrete app, and the Concrete app pays dividends weekly in REITs, right? And I like that because, you know, you're making money every week and you can reinvest in compounding faster. This is another tool they can use to compound. So my take, I like it so far. The NAV seems pretty stable. Yeah, it's expensive. Yes, it's $45 a share. It's expensive, but you do what I do. Throw in $20 this week, $20 next week, then you get a full share. If it pays 35 cents a share, reinvest that back into it. No, but they pay weekly. And remind everybody, there are some months out of the year that has 5 Fridays, so you get a bonus. You get a bonus check. Unlike with, again, I'm not the monthly ones. Instead of getting a dividend once a month for like a 31-day calendar or 5 Fridays, you get 5 dividend checks a month. So you get the compounding of shares much faster. This is a compounding machine. This is a compound play. But some people look at this like, you know what? I'm pouring money in this thing. I want to check every Friday. I want to check every Friday. I want to get paid every week. I want to make $500 a week. And just imagine you have this thing when you're older and retired, getting paid $500 a week. You know, you get paid Friday, and the next Friday you get paid again. Now, to close on this subject, my last position I had years ago, they paid weekly. We get checks every Friday, and I worked 4 10s. So I worked Monday, Tuesday, Friday, Saturday. I was off Wednesday. I was off Wednesday, Thursday, Sunday. So with the weekly pay, I worked Friday and Saturday. I couldn't spend the money till Sunday, and I can't do much because I gotta get straight for Monday and Tuesday. And then I'm off Wednesday and Thursday, and when I go to work Friday, I get a paycheck again. So I love getting paid every Friday. So this is a nice. If it can hold a NAV and pay 25 cents, 31 cents. I mean, I'm on stock analysis, look at the dividends. I mean, they're pretty solid. 36 cents, 33, and then it paid 9 cents one week. And remind you, if it pays low 1 week, the next week it might pay 26 cents. Then 33 cents, 25 cents, 31 cents, 37 cents, 21 cents, 21 cents, 14 cents 1 week in June. Then I paid 23 cents, 29, 35, 19. So the lowest is paid since the inception. Now it paid over what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 checks, 15 paychecks, and the 2 lowest ones was 9 cents and 14 cents. Those are 2 lowest out of 15 paychecks. 2 of them was a low. Rest of them been 29, 30, a lot of 30s, 26, 25. So I'm a big fan of this fund. I like it so far. That's why I'm in it. That's why I have it in my Roth and my taxable account. And the goal for this thing is to compound. If I have a lifetime goal, I would love to get $500 a week in this thing and let the thing compound. Imagine get paid Friday and you're off the weekend, and that next Monday, well, I'm gonna get paid again in 4 days. Just imagine that. And that's my mindset I have with this fund. I get paid Friday. With Robinhood, you get paid Friday, but the dividend won't hit your account until Monday morning or Monday morning. So Monday morning, you get your dividend, you get $500, and that's Friday, I'm gonna get paid again, or that's Monday get paid again. So you never be broke. On the top of that'sking.com. Thanks for watching.